The Nigerian banking industry has attracted more than a passing attention since August 14th, 2009, when the Central Bank of Nigeria swooped in on 5 commercial banks and audited another 14. Money supply has gotten even tighter, and now concerns are being raised by the survival of numerous microfinance banks in the economy. There has been a working relationship between some microfinances and the bigger banks.
We do know that the microfinance banks went far beyond their mandate to actually function more like a quasi-bank itself. Means that they were going for deposits. Don't forget that what the natural intention for the microfinance bank was for shareholders to come together, pool money together, give loans out, give it to people, they pay back with interest, and they turn it around over time. They also get some level of support from the federal government. That was how it was supposed to work.
The crisis in the bigger banks has split over subsidiaries, and there's little credit to be had. Further down the chain, customers of microfinance banks have felt the heat. Not only are people doubling efforts to qualify for dwindling loans, they have to pay higher costs for borrowed funds. This could have an effect on the larger economy.
They would have to make provisions for the non-performing assets. These toxic assets are now just being shuffled around and covered. Eventually they will come out in the open. And like everything malignant, it will need a surgical solution at that time. I think there will be a solution to it. I think the banking system will be resolved in a very creative manner. And the banks will come back to doing the business which they're actually requested or required to do, which is lending money to the real sector.
There's also an effect on the savings culture, as low-income earners are even less trusting of their bankers.
When you make changes and you create laws that create changes in the market space, i.e. you build momentum and you increase businesses, for example, the banks from 1 billion to not 10, 20, 25 billion, and then they went on to 100 billion, but yet their regulatory capacity is still the same that was managing 1 billion. Those institutions, there were two sides to it. From the institutions, those who were in the credit department were more or less still with the same mindset of those who were doing credit of 1 billion, 2 billion. That's one side. The second side was that you did not enhance your supervisory and oversight capacity to do so. But there's a third one, the will. The will to make sure that incestuous relationship between the regulators and the players themselves does not compromise the system itself.
As central bank officials scrutinize the books of commercial banks to unravel hidden or underreported activities, many people say the turn to the light on microfinance banks need not be too far.